It's right there, isn't it? Look at the oil price. Look at the oil price. So you see that that's your opportunity to get your crack spread on the books. Opportunity to buy into that, because that is, everybody knows this price level. So they're going to be buying into that, and their stops are going to be below that, which allows you liquidity into that bit of business there. It allows you to get the liquidity. When you zoom in, guess what we got right there? See the volume? See it? That's your trade right there, isn't it? That's your trade. And where are we going to get liquidity at the top edge? Well, there's a couple of places. We know that there's going to be sellers coming in at this price. So we know that there's liquidity above here, and we know there's going to be liquidity at 33s on the crack spread. Remember, it's a thing. It's not made up. It's not a structure, a construction. It's a real thing. So we're going to get liquidity there. And obviously, with oil prices now going parallel to the crack spread, of course, that rise in oil prices is going to start hitting the crack spread at the top edges. Just be aware of it. Okay, so what's my concerns about what's my concerns about equities today, guys? What is my big concern about equities? Let's take a look at yesterday's dot plots. If you remember in yesterday's dots plots, we were already discussing the Fed. We were talking about Fed, and we were talking about this idea that the Fed has, you know, they've got 3 interest rate cuts priced into the markets. So we've got 3 interest rate cuts priced into the markets here. And, you know, the concern that I had was it's not enough. It's not enough in terms of 3. In terms of 3, it should be none at this point, none. And that's based on a look at the 5-year linker market. You know, they should not be pushing for interest rate cuts in any way, shape, or form at this point, when the 5-year linkers is telling us a completely different storyline. Well, I said it's going to be very important today to see the 5-year linkers starting to show some signs of weakness. Well, the 5-year linkers today has done the exact opposite. It's opened gap up. And then when it's opened gap up, we know that this is going to drag up this number, right? We know that this red line, 5-year linkers, drags up this line, Fed funds rate. So even if we go like for like, not on a macro chart basis, but like for like on this one swing, you would imagine that the December Fed funds should probably be somewhere about here. Would you agree? Well, if the Fed funds rate should be going up to 475 to 500 on a like for like basis at the moment, you've got to be wondering about this idea that if they started to price out 3 interest rate cuts and they started to price in 2 interest rate cuts, you're probably looking at this and saying, you know what, this is going to cause a bit of sell side pressure on equities. So whilst we've got that short-term inflation coming back out again, then there's a short-term pause on this, which is why we've been able to buy equities at the low edge. But if we see any signs of that coming back to run against us, we absolutely must get back into short selling equities. If we see any problematic signs coming into this marketplace, anything, any sign at all, you got to say to yourself, well, that's enough for me. I'm done with this, guys. I'm done with this. And you've got to get away from that bit of knowledge. Do not lose sight of it, guys. Do not lose sight of it. It is mega dangerous. So, whilst it's mega dangerous, guess what happened? Started to get the wrong things coming in at the wrong times, didn't we? So you can obviously see these things happening. I mean, it's one of those elements that you're always watching. Now, I don't think it's that bad. You know, obviously, NASDAQ is very, very, very sensitive to this. And, you know, I don't think it's that bad, though. So I'm interested. You know, I don't think it's a tragedy storyline. I think, you know, on dips, there might be opportunities for us to explore the possible bottom edge, so long as the short-term inflation does still show us some movement. And that's obviously now just about trying to balance out those individual pieces of the storyline. So with inflation dropping out a little bit, I like the idea of just playing around with this and seeing if we can get any bids at good prices, maybe with a rejection of some sort of liquidity somewhere. And if I can do that, I might be interested. Maybe's aye and maybe's no. We'll soon find out. Smart money seems to be quite interested in it just now, so I'm going to take a little pop on that and see if we can get a little ride to the north side liquidity. There we go. Beautiful. What a winning trade there, guys. I just bought some 18640s. We just traded very quickly to 18646s, and we made some very quick money against that smart money. Very, very, very nice trade, wasn't it? Very nice. It was a Charlie D transition. I've already taken my money, guys. I took it as a scalp trade, but I'll show you the trade I took. So I've just talked about that trade very, very quickly there. But as soon as I was talking about it, I saw it happening. So I decided to jump. I'll show you what the trade was. I did put it on Ninja Trader, by the way, but it hit the target price. So it took me off Ninja Trader. So it hit the target price I had in mind. But anyway, you see what the trade was here. There's your Charlie, right? You can see your Charlie coming in here. You can see a POC here, a couple of POCs developing in this area. So when I saw the Charlie coming in here and I knew that we were going to go after that liquidity there, I had to jump and had to jump very quickly, which is why, you know, literally I got into the trade, and when it spiked through, I just took my profits on the spike. Very, very quick profits on the spike. So, yeah, nice, easy trade. Nice and easy. You can see smart money buying, very clean, very sharp, very easy to recognize the smart money buying coming in. And the leans against these POCs, and then the buy side press, which is effectively the tipping price buy trade, isn't it? Effectively tipping price buy trade, boom, money's in the bank account. Now, why did I buy it? Why would I not want to buy it? It was a pretty obvious buy trade, was it not? Let's take a look at the S&P here. If we're looking at the S&P from a pretty obvious buy trade point of view, you can see that 53.15s provided you with some nice liquidity to buy into just in here. Now, obviously, the trade I took was actually on the way back out of town here on the NASDAQ, not on the S&P. And you can see the NASDAQ's given us a nice buy-side pop on this. Now, into the top edge, you can see that this is our inflation line. Inflation's coming down here, so the buy trade makes a lot of sense. And there she blows, right? There she blows. So with inflation coming down, buying into the NASDAQ S&P relationship, buy-side S&P, buy-side NASDAQ, got the press on the NASDAQ. And obviously, we've lost the value now on this, and it should be dropping back out again, shouldn't it? So we've lost the value here, should be dropping back out. It is dropping back out just now, and that's all she wrote. Thank you very much. Beautiful trade, lovely winner. And all you got to do is just find a couple of those every day, and you'll be pretty good shape to make some nice, easy money every single time you switch on your computer. And it's just about doing the necessary amount of work, isn't it? Just do the work, and you will be rewarded. Sell-side equities at the moment, and I'm getting a stop in at break-even there. I had a nice little play against that little turnaround here. Managed to make some money on the drop here, and we're going to see if we can hold on to that short sell. And at the moment, we've held on to it. We're in at 16.5, and it's dropping out a little bit at the moment, 16.5 short. So I paid 16.5 on that short sell. And don't like what's happening here. So stops are at break even. I'm not going to hang around with this. I'm just going to get stops at break even. And if it takes me out, I will be happy to walk away from this one and try and find a better price point. 16.5 doesn't look very good now. But if it goes, I'm in it. If it doesn't, I'm out of it. It doesn't make any difference to me one way or the other. There's my sell trade there. 16.5. Sell side only business. I like how this has turned back up again. That's bought me a bit of breathing space. So I'm able to get a +1 into that trade now instead of just a break even. So I'm now not going to lose any money. And we'll see if it can now break sell sides. So I like what I'm seeing. I like the inflation's ripping higher here, guys. We could be on for a runner here. Woo-woo! Kick it on down, boss. Kick it on down. You see the cheeky monkeys tried to take us out at 16 here. I just sold some more into the 16s, added into that trade there for the press. Looks really good at that price. So the fact they tried to run me out gave me an opportunity to sell back in. Boom. What a trade. What a trade. Into liquidity, bag and tag some monies, guys. As soon as you hit liquidity, get some of your monies. Every time, get some monies. If you're a multi-lot trader, get some monies. Because they always might buy some here. They might always buy. And when the value in the NQNES turns up, that's not going to go any lower. Take it out, get your monies. Wait for the next opportunity. Wait for the next opportunity. Wait for the next liquidity. And then think about what you're starting to see.